Good day, candidates. We're gonna be looking at the question paper accounting, which was written November 2020. Question 1 and question 2, because we did question paper of 2022, question 1 and question 2. Let's look at this question paper to see if there are any differences and any similarities that we can pick up. We will assume that there was no solution provided. We will assume that there is no answer sheet provided. We will start it from scratch. You just have to have a notebook or a book where you're gonna take notes if need be, calculator, your pen, your pencil, and just to make comparisons with what you have. You might have answered this question paper previously. If you don't have this question paper, you can download it directly from the page of the Department of Education, or you can come to this platform. Below on the link and description, there is this link and description for this question paper. You just have to scroll, and then you will find this question paper together with this suggested solution that we're going to be making. So we're going to be looking at question 1 that was written in November 2020. And question 1 on this table of content is fixed assets and statement of comprehensive income. You can see they like this statement, so you have to, and 60 marks, come on guys. Candidates, 60 marks is a lot of marks, and believe you me, it's 60 free marks, provided you understand the statement of comprehensive income. Hence I said to you earlier that if you understand your format, if you understand 12 months, you might not have challenges on this exercise, or rather on statement of comprehensive income. And if they ask it like this together with fixed assets, you might spend a lot of time on fixed assets, but make sure that all easy marks, you collect them as quick as you can. Something that is confusing you, just, but play around with your thoughts and ask yourself whether or not can you give an answer that is good enough. And don't forget to breathe. You just have to breathe in, mindfully breathe out, and just relax and answer this question. Fixed assets and statement of comprehensive income. Let's look at question 1. Required 1.1. Calculate the following. The missing amounts denoted by Roman figure 1 to Roman figure 3 on the fixed assets note. They gave you a note to fixed assets. Profit or loss on the sale of equipment on 1 October 2020. So the asset was sold on 1 October 2020. And remember, the financial year end is 2021, February 28. So these 2 marks you must take advantage. And then 1.2, calculate the trading stock deficit. Prepare the statement of comprehensive income, 43 marks. Out of these 43 marks, there is about 15 free marks that you must take advantage of. And then before I could look at the information given, I know that I have to prepare my statement of comprehensive income. Let me open the spreadsheet. I'm going to be doing everything on the spreadsheet. I don't have a pen or a chalkboard. So I'm using my machine here, my computer here, and this class is not sponsored. It has no donations. I just decided that I want to improve your symbol coming these exams. Maybe you were gonna get C, maybe you're gonna get B now. Maybe you were gonna get D. Just maybe you're gonna get A now or B symbol. But good luck with the upcoming exams. And I'm giving myself for free for you, and compare what you have just done. Compare. If you haven't done anything about this exercise, just download this question paper and just listen, and with the collected evidence that you have of accruals, of prepaid expenses, of notes to the balance, to the statement of comprehensive, to the statement of financial position, all these things, they come together in one. And in this question, they are very, very integrated. So let's look at that integration, because I'm just facilitating this paper for you. And I don't want you to have a situation where you don't know where did they get this amount, how was it. And you must have an understanding, even if you get this amount, have an understanding. That's what I'm trying to achieve on this tutorial. It is for free, but you are welcome to donate, because at the end of the day, we must build a school. Let's open this spreadsheet and do our statement of comprehensive income. Statement of comprehensive income for the year ended 28 February 2021. And me and you will not argue about this to say it's sales, less cost of sales, gross profit. You see, now it comes on the exam now. So you are not wasting your time about these things. Other income, maybe you jump 3 lines and say operating income, and then operating expenses, and then maybe let's jump about 9 lines, 1, 2, 3, 4, 5, 6, 7, 8, 9, and then profit from operations, interest income, and then we have profit before interest expense, and then we have interest expense, and then we have profit before tax, and then we have income tax expense, and then we have net profit after tax. That's it. And you have your format, because I said to you, just know your format. If you know your format, these things becomes easier. And this is your format for statement of comprehensive income. Let's just rename it. Statement of comprehensive income. And then here I will say rename and say calculations that we're going to be doing. And then there is other thing that I like to do, which are general ledger when necessary. And they might ask the general ledger. Sometimes they might not ask it. There is probability, 100% chances of this, 100% chances of that. So we have these 3. Let me increase the font so that everyone sees nicely. And then also on calculations, let me increase the font. Now on calculations, we have 1.1.1. We have 1.1.1. And then what was the question? Let's look at the questions now, because at least we've done our statement of comprehensive income full blown. Now 1.1. The missing amounts denoted by Roman figure 1 to 3. We look at the information now. We are given this pre-adjustment trial balance, question mark on trading stock, question mark on sales, question mark on interest on loan. These are the question marks we are given. And then we have fixed assets, adjustments, and additional information. Number B, adjustments and additional information. Vehicles. The business owns 2 vehicles on 28 Feb 2021. The second vehicle was purchased on 1 November 2020. They don't even tell us the amounts. They are just giving us this information. They know that for you to get an amount, you must rely on the note to the fixed assets, which they told us that they did put it in. Vehicles are depreciated at 15% per annum on cost. And then they speak about equipment. Depreciation is 20% per annum on the diminished balance method. Unused equipment was sold for 40,000 on 1 October. Accumulated depreciation on the equipment sold was 36,600 on 1 March. Statement of comprehensive income tests whether or not you understand 12 months. If something was received for 11 months, you add that 1 month. If something was received for 14 months or was paid for 13 or 14 months, you subtract. But that column emphasizes 12 months. Now, when you speak about fixed assets, what the examiners are testing are the dates, whether or not you understand the dates of the financial year. If the asset in question came during the year, if they bought the asset during the year, which are additions, can you justify and calculate depreciation pro rata the period within which the asset was used into this corporation? So fixed assets are testing the dates, while your statement of comprehensive income, examiners are testing whether or not you understand the concept of 12 months. Take that into account. Therefore, unused equipment, hence I'm speaking about this, is because of dates where it was sold on 1 October and the accumulated depreciation on the equipment sold on 1 March. Now you see, the accum dip on 1 March. But let's carry on, because the question was answer Roman figure number 1 to Roman figure number 3. And you look at the extract of the fixed asset note, and Roman figure number 1, it's a free mark, because it's 460,000 minus 396. This is the answer. Let's look at that and say Roman figure number 1. We already have the answer there. As quickly and precisely as we can, the answer is cost less accumulated depreciation, 460,000 less accumulated depreciation, 396,750, which is equals to, that is your mark. Let's open up the calculator. Cost 460,000 minus accum dip 396 750, 63 250. That's your answer there. 63 250. And this is the carrying amount. Carrying amount 63 250. Now let's look at what is the next question. It's Roman figure number 2, where on these vehicles calculate the value of depreciation. And we know that depreciation on vehicles is at 15%. Now we know also that the company owns 2 vehicles, and the second one was purchased on 1 November. And if it was purchased on 1 November, we know that there are additions of 510,000. Now the second question is about Roman figure 2, where we are required to calculate the value of depreciation. Now we have this one, which was addition, 510,000 multiplied by 15%, multiplied by, it was purchased when? On 1 November, December, January, February. So it was used for 4 months over 12 months. So the depreciation value for that asset which was bought during the year is 510,000 multiplied by 15% multiplied by 4 divided by 12, 25,500. We're happy with that. But now vehicles are calculated at 15% on cost price method. Now we have these vehicles at the beginning of the year, which is cost, and the cost price of this vehicle was 460,000. 460,000 multiplied by 15%, multiplied by 12 over 12, which is equals to 460,000 multiplied by 15%, 69,000. 69,000. Now, 69,000, and when you look at the accumulated depreciation of this vehicle already, it was 396,750. It's very, very high. And when you look at the carrying amount of this vehicle in question was 63,250, and 63,250 cannot be lesser than the cost of the vehicle. Therefore, this vehicle must be written off. Written off, we cannot just write off, because if we take 69,000 and minus that amount, is going to be a negative amount. So it must be represented by 1 rand and be subtracted as such, to say we're going to be using 63,250 as the carrying value of this vehicle, or rather as the depreciation value of this vehicle, 63,250, because we cannot use this cost price, but we're going to use the amount for carrying value, 63,250 minus this vehicle in question with 1 rand, and then is equals to our depreciation value is 63,250 minus 1 rand. And this rule or this principle, it's there on your notes, it's there on your textbook. Just play around this concept of when do we reduce the asset to 1 rand, and then you will come back to this exercise so that you understand fully why we use 1 rand and we use the carrying amount to calculate the depreciation value. This is how you do it, and if you do it like this, you will collect maximum max, which is 63,249, 249. And then the value for depreciation total, because now you have calculated the depreciation, the one that came during the year and the one that you just calculated that comes from over the years. You use your calculator to combine these two, and then you get your total as 88,749. That is the value of the depreciation for Roman figure number 2. And then we look at the next question in terms of these Roman figures: disposals at carrying value. Disposals at carrying value. Now, when disposals is mentioned on the question paper, you must know that asset disposal come into play, and you must know that the examiners wants you to determine whether you get a profit or a loss on sale of asset. Candidates, just be careful with these things and make sure that you are precise and you answer the question. Don't answer what is not asked. Answer what is required, such that I'm going to open here the general ledger account. Is not required. They did not ask for this account. But for the sake of completeness on what we're doing now, I'm going to open it anyway, so that at least you understand what I'm coming from in terms of my conclusions of this solution. Asset disposal. Now, 2021 February 28, we have equipment from general channel, and then we will check the amount. 2021 February 28, we have accumulated depreciation on this, on equipment. Now also it comes from general channel, and then let's make this look professional like you, because I know you are professional in both fact and appearance, and your appearance should inform the users of these financial statements that indeed this is an accountant. So that's why I'm saying let's make it look professional like yourself, and put this border here, and put these lines, and so that it looks like a general ledger and it satisfies the way you understand it. They do it like this, even when they compile these answers. Let me put double line here so that it can differentiate between the debit and the credit side. No, most accounting, what you do on the right hand side must be done on the left hand side. Expenses, everything that you lose out starts with X. Ex-girlfriend, X. So even money, X, you lose. Whatever you lose, it starts with X. So, but we are not there. We are here on asset disposal. Now, you have this asset disposal in question, and you are given, and they said to you, depreciation is 20% per annum on a diminished balance method. Unused equipment was sold for 40,000 on 1 October. Unused equipment was sold for 40,000 on 1 October. There's something also that I want to show you here on this question in terms of vehicles and equipment. Let's look at the vehicles for just a few seconds. It was 460,000. They added vehicles of 510,000. And now we have 970. Where does 970 come from? Is this 510,000 plus 460,000 because they added? But in the case of equipment, the cost price was 360,000. So much so that they sold for at cost, and then now the cost price is 285. Here in vehicles it increased, but on equipment it decreased. It shows me that let me take the opening balance or closing balance and subtract the opening balance so that I get the cost price of the vehicle which was disposed of. So in so doing, you're gonna be saying, okay, for me to get this figure is 285,000, or rather 360,000 minus 285,000, which is equals to 360,000 minus 285,000, which is equals to 75,000. So the cost price of the vehicle that was disposed of was 75,000. And that's how you when you calculate it, that's how you get it. But now the examiners gave us the accumulated depreciation on this asset disposed of at the beginning of the year. And they said accumulated depreciation on the vehicle sold was 36,600 on the beginning of the year. 36,600. It's at the beginning of the year. We must add so much so that is the depreciation from the beginning of the year until the time or the date when the asset was disposed of, which was 1 October. So now if you're gonna put this accumulated depreciation of 36,600 here, it's gonna be incorrect because it's at the beginning of the year. We want it until the date when it was disposed of. Now if you say 75,000 minus 36,600, it's equals to, because you minus now that one, so that your interest is to calculate the one until the date the asset was disposed of. I hope I'm making sense. 38,400. 38,400. Now, 38,400, that's when you're going to multiply it by the percentage. Multiplied by what percentage is given for there is 20%. Which is equals to 38,400 multiplied by 20%. And out of that 20% again is until the date, because this asset now is not for 12 months. Until the asset was disposed of, it was used for March, April, May, June, July, August, September. Not October, because it's the first day of the month, multiplied by 7 divided by 12 until this asset was disposed of, and then multiplied by 7 divided by 12, and then it is 4,480. 4,480. Now, this 4,480 comes here to be the accumulated depreciation, or rather the total for the accumulated depreciation until that asset was disposed of, 36,600, which equals to 41,080. Now, you check which side is bigger. Which side is bigger, debit or credit? Debit or credit? It looks like it's credit. You add these amounts together and then you get your total, 81,080. 81,080. And then that total, when you subtract that total from this, you take total, you subtract what is given there, and then you get your profit on sale of asset. And that's how it's done. Now let's look at what was the question on Roman figure 3. Let's look at what was the question on Roman figure 3. Let me fix this quickly. Okay. Our question on Roman figure 3 was disposals at carrying amount. At carrying amount. Now, this becomes very simple because we're speaking about that amount of the cost of 75,000, because disposals at carrying amount is equals to cost price minus accum dip is equals to carrying amount. And this is what exactly they are asking to say. Cost price is 75,000, which is the amount that was not given, and you had to calculate it on your own. And then accumulated depreciation on this, inclusive of, if you take 36,600, you're going to be incorrect, inclusive of what was calculated until this asset was sold, or rather until this asset was disposed of, which was for the 1,080. And then the disposals at carrying amount on this asset in question is equals to, you use your calculator again, 75,000 minus 41,080, which is equals to 33,920. Now, you happy with that? Disposals at carrying amount. Let's look at what is the next question, because we've answered these Roman figures until number 3. We have 1.1.2, profit or loss on sale of equipment on 1 October 2020. Profit or loss on sale of equipment, 1.1.2. You have that answer because we got profit on sale of asset. How much was that profit on sale of asset? Here it is on the general ledger, 6,080. 6,000. You don't have to calculate it again. That is why sometimes you have to do this asset disposals account. You have to do general ledger account so that it gives you a quicker and clearer indication. And as you do your answers, it becomes easy. It becomes the guidance for you. I think now we have 1.2. Refer to information on BE. They say BE for trading stock. Calculate the trading stock deficit. Calculate the trading stock deficit. And they say we must refer to this Roman figure or alphabet number B5 in terms of trading stock. And look, trading stock was not given. No amount was given there. They gave us the question mark. But on that E, we have the information about the trading stock. Trading stock is valued on the weighted average method. The ledger accounts and records reflect that 280 units should be on hand. However, the physical stock count reflects only 262 units on hand. The stock records are as follows. Now, they gave you the the trading stock deficit is the difference between the two. Why they are giving you this information is because weighted average method was used. And if weighted average method was used, we look at what is available for sale, the total, and then we divide it as such. And it becomes very simple and nice. And if you have queries or questions about this, look at the previous exercise that we were doing. Is exactly the same. It's exactly the same. Just look at the previous exercise. The script is the same, but the content differs here and there. So now we have 280 trading stock deficit, 280 minus 262, which is equals to 280 minus 262, which is equals to 18 units was a loss. 18 units was a loss. But now we have to calculate the weighted average. And remember, weighted average, you take the total that is available for sale, 8.1 million divided by 2,000. Divide by 2,000 units, which is equals to 8.1 million divided by 2,000, which is equals to 4,050. 4,050. That is 4,050 for you there. And then 4,050, this 4,050 multiplied by the stock loss, trading stock deficit. Then you get multiplied by 18 units, which is equals to 72,900, which is our trading stock deficit, 72,900. And we're happy with that. And we carry on looking at what is the next question. The next question is 1.3. Prepare the statement of comprehensive income, which is 1.3. Prepare the statement of comprehensive income. Now, out of this statement of comprehensive income that they request you to prepare, you have already marks that you must cut and paste and put it there for the sake of time, for the sake of marks, for the sake of not forgetting. Remember, you just got trading stock deficit. You just got that now. And the amount for trading stock deficit, it's 72,900. Here it is, 72,900. You don't change it, 72,900. What else did you get before you can carry on? I have other income. I remember that I have profit on sale of asset. These are the things that you already have and you don't want to waste time. How much was the profit on sale of asset? Again, you look at your ledger, it's 66,080. 6,080. Now, these are the things that you already got that are part of this exercise. And the last one that you got was depreciation. And the depreciation, you look at what was given on the carrying on the notes to the fixed asset. Depreciation on equipment was already given, 31,281. And then we have this depreciation on equipment, on vehicles that me and you already calculated, which is depreciation on what vehicles. It was 88,749. 88,49. You happy with that? You put the bracket, you close it, you show the examiners that, okay, I have 88,749 plus, use your calculator, 31,281. 120,030. You carry on now. Say, okay, let me do my B. The business maintains a markup of 120% on cost. Note that trade discounts of 648,000 were granted to special customers. The business maintains a markup of 120,000 on cost. The business maintains the markup on cost of 120%. We are not given sales, but we are given cost of sales. How much are the cost of sales given? 6,966,000. 6,966,000. Now, I'm told that in terms of percentages, or I know that in terms of percentages, this is always 100% and is maintained at 100%. This is what is happening in terms of this. I'm going to do the sales less cost of sales is equals to gross profit. I want you to see this nicely. Now, this is maintained at 100%, and I'm told that is maintained at 120 on cost. So we have 6,966 million multiplied by 101.2. Yes, minus that discount that was granted to those special customers. Remember, they have these ones with special treatments because they buy in bulk, they deserve huge discounts. 648,000. 648,000. We must subtract that amount, and in order for us to get now the gross profit, it's 6,966 million multiplied by 1,2. But we must remember that this amount include this 648,000, which we must not be misled. And you must definitely remember that 7,711,000 711,200. Now, and I know that this represents 120%. And again, I know that cost of sales are always a minus. I know that are always a minus. So for me to get this percentage now, sales less cost of sales is equals to gross profit. So we must agree that 220 minus 100 is equals to 120. Therefore, if that is the case, it says to us 6,966 million multiplied by 220 minus that 648,000 that was granted to special customers. 6,966 million multiplied by 220% divide by 100, which is equals to, I want to record this 15%, which is equals to 15,325,200, and then minus that, minus 648,000, which is equals to 14,677,200. Now I have my sales, I have my less cost of sales, I have my gross profit. Very, very important. And you don't have to use rocket science. You just have to use common sense and say, I'm given, and do it as such. So this is how you get your max, maximum max. And let's carry on and read the next adjustment, because we've done with discounts and sales. Number C, the account of debtor B Melter 800 must be written off. Let's write off that account. Bad debts. Bad debts. How much bad debts that are there already on the pre-adjustment trial balance? It's 19,200. plus the bad debts that are already there on the adjustments, which is 20,000. 19,200 plus 800, 20,000. Bad debts. Let's carry on. Number D, provision for bad debts must be adjusted to 5% of outstanding debtors. Because I always maintain that I opened this account and I'm gonna open it again. Sometimes accounts, when you open them in the general ledger, they become relevant. Sometimes they become irrelevant. Look at the account for asset disposal. It became so much relevant that you must really practice it as much as you can. Anytime you get time, try to practice this concept of asset disposal, provision for bad debts. And I said to you, provision for bad debts, it always has a credit balance. Let me do lines so that it looks professional like you. It doesn't pose questions, but rather it makes sense to all of us. Let's do this. Open lines. Happy with that? Do this line to show that, yeah, man, I know my work. I'm an accountant. I can record these transactions. You just have to record. Everything you have to record, even this class. If I don't record, here's the camera. I have to record. If I don't record, we don't have this. So it's the same thing. It's the same. We'll have it. It's just that we don't have time. We'll have time for such things one day. Topic for such things. Even when you pray, you must use accounting. We say, God, we are accrued to honor your word. We enter in a transaction where you said you won't write us off as irrecoverable, oh Lord. But we are not there for now. We are here to say it always has the credit balance 2020 March. March the 1st, we have the balance brought down. And then again, 2021, on the last day of the financial year, which was Feb 28, we always have what we call balance carried down. And it's what we're going to be calculating now. To say, we look at the debtors control. And then less bad debts. Where are these bad debts? From adjustment only. Okay, from adjustment only. Just be sure of that. And then that's when we're going to be multiplying by percentage. How much are our bad debts from the pre-adjustment trial balance? Debtors control, by the way, 123,000. Meant to say that 123,000. Minus 800. Remember that 800 bad debts. And then that's the only time you can 122, 200. And then that 122, 200 multiplied by percentage of the provision for bad debts. How much was the percentage? Was 5%. And then how much we get there? 122 to 100 multiplied by 5%. 6,110. So our balance carried down is 6,110, and then you check which side is bigger. I didn't record the balance brought down. But balance brought down, it comes from the pre-adjustment trial balance where it is provision for bad debts. And again, on bracket, they will indicate that this was the balance at the beginning of the year, 7,030. Which side is bigger? 7,030. 7,030. Now, which is equal to 7,030 minus 6,110. Provision for bad debts at adjustment. Happy. Now, that provision for bad debts adjustment, it comes to other income to say provision for bad debts adjustment. Provision for bad debts adjustment, which was 920. 920. And in this provision for bad debts adjustment, you can have this balance of 7,080, but to get this one 6110, sometimes it becomes difficult. Is that so? 6110, yes. And then to get that, because that 6110, you must always remember, before you can use the percentage of the provision for bad debts, you look at whether or not there was bad debts or bad debts recovered. Very, very important to collect maximum marks. Now, we have this provision for bad debts adjustment. We have the bad debts. We're done with that. We carry on now. We say, okay, done with bad debts. I'm done with provision for bad debts adjustment. What is the next adjustment? Is number E. I'm done with E. I'm going to F. 30% of the audit fees is still outstanding. 30% of what? Audit fees. You look at what is, how much was audit fees given. Audit fees was given as 91,000. Now, 91,000 represent 70%. Represent 70% times 100 divide by 70. Audit fees 91,000 times 100 divide by 70, which is equals to 130,000. The total is 130,000. That's how, because now that amount of 91,000 represents 70%. Let's add another 30% so that everything is 100% and is maintained at 100% for 130,000. Or it's going to be saying, or 91,000 minus so much that you got out of this 130,000 minus 91,000, which is equals to 39,000. That's how you do it. Audit fees. Done with audit fees. There is accrued expenses there. Audit fees. G. The monthly rent income did not change during the year. During February 2021, the tenant paid 9,000 for repairs to the premises and deducted this from his rent for February 2021. Repairs are the responsibility of the company, and this was not recorded. The rent for March was received in advance. We already received the rent for March. However, our year end on 28 February. Therefore, the rent for March must be deducted. It means that whatever amount that is received there whatever amount is for 13 months. Let's look at the rent income and record as such. And we go to other income and say rent income. And then we put on bracket what is given there, which represent 13 months rent income. 173,000. 173,000. And so much so that we refer to literature, English. Listen to English. It says, during February, the tenant paid 9,000 for repairs to the premises and deducted this from his rent for February 2021. He was not supposed to deduct this 9,000 here. So let's put it back 9,000. And after this 9,000, we can be able, we can be able to say, okay, 13 months, 173,000 plus 9 14,000, which was deducted, divide by 13. So 14,000 times 12 months, we want for 12 months, times 12 months. This is what we want. We don't want that income received in advance, times 12 months. We know that our rent is 168,000 when we deduct that. And then we have this concept now of, remember, let's read this G again. It says, and deducted this rent from his. Repairs are the responsibility of the company, and this was not recorded. Repairs. Let's look at if they gave us any repairs. If they didn't, we just take that amount as it is and record it under expenses. There is a repairs of 476,000. 476,000 plus 9,000. Plus 9,000. And we get 476,000 plus 9,000, equals to 485,000. It was not recorded. Now we carry on and check what could be the next adjustment. Now we deal with adjustments, taking these marks, taking these free marks. You know, G, we done. H, the company has 4 directors earning the same fee. One director resigned on 31 May and received his fees up to date. Another director is still owed fees for January and February 2021. Now, we speak of directors' fees. And we look at the pre-adjustment trial balance. We figure out how much the amount was given of directors' fees, 3,330,000. 3,330,000. And we look at what is our adjustment. Speaking, it spoke of 4 directors. The company has 4 directors. Let's do this. Directors. Let's do this. Directors fees. Now, 4 directors. Let's calculate in terms of months here. Now, 1 director resigned. So he worked for 1 Feb until 31 May. He resigned. How many months? March. 1 March, not 1 Feb. Beginning of the year. March, April, May. 3 months. Now, 1 director resigned and received his fees up to date. Another director is still owed 2 months. Now, 2 directors. They received their 24 months. 12 months times 2 is 4 months. But 1 director owed is being owed 2 months. It tells us that out of 12 months, 2 months is owed. He received 10 months. So the total of these months is equals to, for 3 months plus 24 months plus 10 months. So the amount that is there represents 37 months. The amount that is there represents 37 months. This amount represent 37 months. Divide by 37. Instead of us receiving 39 months, because we owe him 2 months and that accrued expenses must be part. Divide by 37. Hence I said it must represent 12 months. Everything must represent 12 months. This director was still owed January and February. Now we understand now that means is 90,000. 90,000 times 39, which is equals to 3510 million. 3510 million. We're done with this director's remunerations. Now let's look at what is happening next. Directors advertising consists of a contract with a newspaper for the entire financial period. Payments are monthly. However, installments were paid for 11 months. 11 months this time. Previously, 11 months. Play around, please. 11 months only. Note the monthly rate decreased by 240 from 1 November. Refer to the previous exercise. Let's look at advertising. Advertising. You look at what is given in terms of advertising in the pre-adjustment trial balance. You just scroll up quickly. Advertising 25,680. 25,680. Now let's read. Let's go back and read about this advertising. Advertising consists of a contract with for the entire period. The monthly rate, payments are monthly. However, installments were paid for 11 months. So whatever that is there represent 11 months. And it was decreased by 240 on 1 November. $240 times November, December, January, times 3. Why times 3? Because it was received for 11 months. 11 months. We cannot add something that is not there. 240 times 3. 240 times 3. 240 is equals to 720. Now, 720. Now we go back to this amount of advertising to say advertising is an amount of 25,680. 25,680, assuming that there was no decrease, plus 720, which is equals to, assuming that there was no decrease, 25,680, 26,400. Now, this 26,400 represent how many months? 11 months, which is equals to divide by 11, 2,400 minus the decrease of 1 month, which is equals to, because it was decreased, to 160, equals to 160. Therefore, so much so on advertising must minus 160. And then when we close off, plus, not minus. Remember, let's read again the last statement. It says them were paid for 11 months instead of them being paid for 12 months. So it's a plus this, so that it represents, when we minus, it will represent 10 months, so it must be represented by 12 months, which is plus 25,680. 27,840. We happy with advertising? We carry on. The net profit after tax was accurately calculated at 1,054,000. 1,054,000 was accurately calculated, and it's given. It's the free mark, given mark. And again, if they tell you that, they further extend their ideology by saying the income tax rate is 32%. And me and you knows from the previous exercise point of view that, okay, I must work back what? That's what is happening here. I must work back what? That's what is happening here. And when you work back what is income tax expense is this amount of 1,054,000. I showed you this on the previous exercise, multiplied by, is it 32%? Divide by 100 minus 32, which is equals to, and I did put this big bracket so that it's clear. Now, let's say 100 minus 32. In our mind, we know 68, 1,054,000 divide by times 32 divide by 68. We know that is going to be 496,000. 496,000. Okay. And then easy, you know that 1,054,000 plus 496,000. They always, or rather they like to see you working backward in terms of this. 1,054,000. And you get 1,550,000. 1,550,000 and 1,550,000, and interest expense was not given. Now, if it was not given, and now you like, I'm done with the questions. Now let me close off everything. Sales less cost of sales is equal to gross profit. Correctly put it so. Gross profit, other income is these items here. When you add them together, they give you the total of other income is the sum of these three. 175,000. Now, gross profit plus other income, which is equals to 766, and then we have these expenses. Now we've done with our adjustments and additional information, and then we go back to the pre-adjustment trial balance and see what was not spoken of, such as sundry expenses, such as salaries and wages. Salaries and wages, how much their salaries and wages. You take your free marks, 1,468, 120, 1,468, 120, 1,468, 120. We have sundry expenses, the last one. Expenses, and they never spoke anything about it. 452, 310. 452, 310. Now, you know your expenses, you add them together. Let's put a block. And what are my operating expenses is equals to sum of these. Use your calculator so that you get that total. And then my profit from operations is let me do it manually. 7,886,200 minus 6 1,286,200. 1.6 million. 1.6 million. Now, interest income, also you look at your pre-adjustment trial balance and see if anything was given interest on loan. It's a question mark, but interest income was given as 25,000. And remember that interest income, it's equals to this plus interest income, and then it gives us the profit before interest expense. And the profit before interest expense, it becomes a missing figure. And it's very important because look at it, you can tell that you must take 1,625 million minus 1,550 million. Let's see what is the answer there. 1,625 million minus 1,550 million, and then you get your interest expense as 75,000. And that's how you get your missing figure. 75,000 is making sense, and that's how you do your solution. Practice these exercises. Make time that you look at this tutorial in particular, and make sure that you compare to the first tutorial that we did. There are many things that you can compare and conclude and make a conclusion that you're gonna pass this exam. Take care and see you into the next tutorial. Bye.